Cat D and Cat C insurance write-offs explained. Category D and C used cars may look tempting to buy, but don't rush in without knowing what you're buying. Scouring the classifieds looking for a used car to buy can sometimes spring up more questions than answers. One of those could well be, what are Cat C and Cat D cars? If you've spent any time going through the small ads in the paper or online, then these categories will certainly have appeared, and the cars they're next to could be temptingly cheap. But what do Cat C and Cat D mean? Well, they're short for Category C and Category D, and these are two of the four classes insurance companies use to classify written-off vehicles. Cat C and Cat D models are ones where the insurer has worked out that any repairs would outweigh the cost of paying out the agreed value of a car in an insurance claim. If an insurer does pay out, then it sells the vehicle on to third parties that may be able to repair a damaged vehicle for less. The insurer uses figures that are worked out using brand new manufacturer parts in official workshops, which inflates them somewhat, so there's every possibility that a Cat C or D will be easy to repair, and probably has been repaired before it's put back on sale. Legislation means that any car that has been classified as a Cat C or Cat D write-off must have it logged with the DVLA where it can be easily checked by any potential buyer. The attraction of Cat C and D cars is that while superficial damage can cost a fortune to repair through official channels, it's not impossible to get them repaired for less outlay. Using a trusted independent garage, second-hand parts, and even a spot of DIY can make Cat C and D vehicles a cheap way to get behind the wheel of a decent car. Looking into Cat C and D write-offs is very much a case of buyer beware, though. Superficial damage can sometimes cost a lot more to fix when you get beneath the surface. Sometimes the smallest ding can result in damage to the car's structure, leaving it unroadworthy. On the other hand, if you know what you are doing, a Cat C or Cat D write-off can often be put back on the road without too much trouble. If you're handy with a toolkit, and can tackle replacing a wing, headlamp, or bumper, or you can fill and paint a dent, or know a friend who can, then Cat C and D write-offs can offer a sensible cut price route to a higher quality car. However, if you're scared of a set of spanners and don't know your way round the shelves of your local accessory shop, you might end up spending money on professional repairs. In that case, you will be in the same boat as the insurance company that wrote the car off, because paying someone else to do the job probably won't make financial sense. Exactly what is a Cat C or Cat D write-off? When insurers write off a car because it's too expensive to repair, typically after some sort of road accident, but possibly also after a flood or fire, or due to damage occurring during a vehicle theft, it means the owner receives a cash payment, and the insurance company keeps the car. These insurance write-offs are classified in categories from A to D by assessors before they're dealt with. Category A refers to cars which have been on fire or are so badly damaged in an accident that they will never be safe to go back on the road. These cars are normally crushed, and even parts of the car that could be salvaged are destroyed. Category B is nearly at the same level of Cat A, as the car's body shell will be crushed, but parts may be removed before this happens. That includes wheels, seats, and some mechanical parts, even the engine if it wasn't damaged in the accident that caused the vehicle to be written off. Cat C and Cat D are more interesting to buyers, though. These are cars that could be made roadworthy, but are uneconomical for the insurance company to do so. They often have just superficial body damage. Some of the best Cat D vehicles to look at will be stolen vehicles that have been recovered after the insurer has paid out the insurance claim. In that case, it could be that the vehicle has hardly a scratch on it, but the fact it's classed as a Cat D write-off means it'll still have a lower asking price than an identical car that hasn't been written off. So should you buy a Cat C or Cat D car? It's certainly worth considering. The nature of these write-offs is that while they could be made safe, it's uneconomical for an insurer to do so. However, a private buyer doesn't have the same hoops to jump through as an insurer does. If the car can pass an MOT, then the ob's done, so it's possible to bag a bargain. As an example, a Cat D write-off could be a dent on a 10-year-old car worth £1,000. Insurers are bound to go through official repair channels, On older cars this can be expensive, and so the price of a new door to the insurer would be £800. As the list price of the car is so low, the insurer decides it's uneconomical to carry out the repair and writes the car off. However, a private buyer could very easily salvage a door from a scrap vehicle for, say, £50, and fit it themselves. The car can then be sold on, provided it's clearly noted as a Cat D write-off. An example of a Cat C write-off would be a car worth £1,000 with a dent that costs £1,200 to fix. If the car is repaired and put back on the road, a vehicle identity check is required from the DVSA for the car to be taxable, and thus roadworthy. However, this test does not check if the car has been repaired properly, so if you are looking to buy one, then get a mechanic to check the car over for you first. So what are the pitfalls of driving a repaired Cat D or Cat C car? The first is value. Because the write-off category is recorded in the logbook, these cars will always be worth less than undamaged counterparts, regardless of outward condition. This should of course be reflected in the price if you are considering buying one of these write-offs. It's also very important not to focus only on the obvious damage. As with any used car, there could be any manner of faults requiring expensive fixes, totally unrelated to the write-off incident. Sometimes insurers won't want to cover a Cat D or Cat C car if you buy one used, but it could just be a case of finding another insurer or accepting a higher premium. These cars aren't impossible to insure. Do make sure you are aware of the health of the vehicle before driving it. Get a mechanic to check it over for you before you buy, ideally. Just because you are buying a written-off car doesn't mean you have to settle for poor quality. You should make the same engine, chassis, bodywork, and interior checks that you would when buying any used car. Call to track write-offs. Potentially dangerous cars that have been written off need to be tracked, according to Frank Harvey, head of the National Association of Body Shops. The problem we have with salvage is that it's unregulated. As long as it looks okay, you can sell it. We need a process with enforcement behind it that ensures any vehicle that's not going to be repaired in a commercial environment is logged and traceable. Everybody is looking for a bargain, and this lulls people into purchasing cars because the price is right. If it looks too good to be true, it probably is. How to buy a Cat D car. Quick tips. Cat D means the car has been written off, usually because of a crash. You can buy a Cat D car. If you've seen one for sale, it will likely have had the damage repaired. A Cat C car will have been more heavily damaged than the equivalent Cat D car. Get a mechanic to check a Cat D or Cat C car before you buy. If your insurer refuses to cover you on one of these cars, try a different provider.